tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I got your watch list coming in at January 17th, 2020, and this one stock is going to go crazy tomorrow. Actually, it's going to be two stocks, and we got a unique situation with both of them, so I have two plays that I'm going to go over. I'm also going to go over the play that we made today, a credit spread that has a daily payout, so I'm excited to explain that, and even with one of the plays here, I am going to explain kind of a little bit of the ghetto spread and the strategy, and then I want to go over what happened in the market today, and then really the most important things we need to be watching, and pretty much what's happened today was kind of a boring day, had a crazy breakout, and now, oh man, even after hours, we're still heading up there, but there is important stuff going on that a lot of people have overlooked. We're halfway through the month already. There is some important things we need to keep our eye on. So I'm excited. I hope you guys are excited. I hope you're hyped, baby. If you missed this stream, that is our one little thing we're asking from you here, right now, anywhere you go. Just get hyped, baby. Take it beyond the comment section and just get hyped in everything you do. The next little mundane task you do, just get hyped about it, baby. Okay, I got that out of the way. But before we get into it, man, you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We did all of these trades live, and then we cover them on the watch list. But come in the morning, youtube.com/thestockmarket. You can watch all of this executed live. And if you have any questions about this, you could ask the questions live and get an answer, baby. Not only can I help you out, but the amazing, my beautiful friend Chad, he is very helpful, extremely helpful. So we will see you in the morning. And then do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. If you got any plays, if you agree with these plays, let us know. Again, if you could remix it, source that information, post them below. We're going to go over these in the morning before the market starts and get some ideas. You guys oftentimes remind me of stuff. People, you got, again, man, all these different minds. It's the hive, baby. It's the cult. Woo! Sorry, I'm still getting too hyped, baby. But right off the bat, as far as today, we gapped up as that China stuff we were talking about, as the market was able to digest it. Nothing bad. There is something interesting in commodities. I want to start looking at currencies again and commodities again because they could start diverging here. The Fed did more repo stuff today, but the biggest piece of news today, it was our important stock news that we discussed at the beginning of the week. We got an update. March 1st, there is going to be changes in how the news is disseminated with the BLS lockup. If you guys are interested in learning more about that, you could just search BLS lockup. You'll see different articles about it. But essentially now we got an update on that starting March 1st. That is going to come into play. So there's that part. But now this happened at close, and you are going to see this every single day now moving forward. At 1 p.m. is when it starts. It is the impeachment of Trump. So I saw some of it today. They sworn in everybody, and now I do think this could be important. Again, it's a weird little black swan. It potentially could be. Most people think it's figured out, but this has a very unique impeachment considering we've only had 3 impeachments in American history. So things could change and escalate very quickly. So just keep your eyes out for that, and that is going to be one of the big things to watch. Other than that, though, the market is still going to be entering into this earnings mode. We're getting now the transportation companies. We saw CSX after hours. So keep that in mind as you're playing and setting up for this. But for the most part, we're still going to kind of have that melt up mode until acted upon by equal or opposite force. So we will see. And again, that's why I want to watch the commodities, especially like wheat and cotton and soy, as well as oil to see, and then the currencies to see how the market digests everything we saw from the last week in the trade deal, because that will still take more than one day to see how the market feels. But coinciding with earnings, it's going to create something interesting. So just keep your eyes open. Don't get too panicky. Don't get too jumpy. Don't get too aggressive. Don't get too timid. You can't get hyped though, baby. But now that we got that out of the way, let us get into the plays. So right off the bat, here's the stock that's going to go crazy. I said this to you guys yesterday. I was jerking some people's chains because the likes in the morning, but I talked about this on the watch list yesterday. I executed the exact trade I was looking for in the morning. Again, I really like this trade. And again, we noticed it right off the bat. The key was the options were kind of cheap in the morning because it dropped a little bit even as it went up. But even when it came down, the options never really lost value, which was very, very surprising to me. And again, a lot of option activity on UNH, but the fact it's breaking above 300, even after hours, it clipped 302 real quick. It came down, but this is going to be an interesting one. Now, we got February 21st, like we said, but here's the key. Tomorrow is probably going to have a breakout, and if anything, UNH might do this. It's going to be one of those 10-bar plays, as well as it'll probably do that for even maybe the first hour or two, but then it could quickly reverse, so just keep that in mind. But there's going to be this continuation play where it'll make that move, come down, you don't know, and then UNH goes crazy. But the contracts are very, very unique. One, we have a lot of time on them, even though we got further out the money, but the key is UNH is supposed to be a slow mover, but given the nature of the stock, and again, at these points, if it does get above 300, this is a very key level, it starts to move fast. That's why the spreads get really, really wide and the contracts get expensive. But the play we did two different plays. One, we got the 330. Remember I said I was looking for the 330 to 350, but these were actually a little bit cheaper in the morning, kind of, or at least in the morning they looked cheaper. I was expecting them to be up a lot more because UNH actually gapped up, but I agreed to get one of these at 32 cents. You guys see here it closed at 46 to 49. And then I got two of these 350s for 8 cents each. So I said I might as well get one for 30. We'll get a smaller one here, or two of these small ones just in case if it does have this big breakout. But these are far. $50 out the money is crazy. Even $30 out the money. But the key is here, you can see $10 increments. If they go up here, we might be able to ghetto spread these, which will be good. But overall, I'm banking on the potential that UNH, when it breaks out of this point with everything else with healthcare and just how people, how UNH moves, it could gain some steam pretty quickly. And if anything, I know there will be an opportunity to flip that extrinsic value if it doesn't get in the money and give us a nice play, kind of like Beyond Meat. So that's the first play. I already made that. Depending on what it does, I might want to get more of these tomorrow, or if anything, I'm going to be on the lookout for a weekly or next week if these get cheap enough, because again, during the day, if it does shoot up in the morning and comes down and then starts to come back up at end of the day, UNH will be a very, very good frog. So that is the first play. The next play is Beyond, and this is something we need to talk about. Remember, we were up a lot actually on that play. By Tuesday, we turned $80 into 5,000. We already had it ghetto spread, so we kept pushing it to the wall, or at least I did. We had a max gain of 2,000. We were up 1,000 at it at one point. But again, now that tomorrow's Friday, it's $20 out the money. That contract is worthless practically. So since we did the ghetto spread, we're still walking away with $80 turned into like 160. But we could have got a lot more money. But then again, I risked that personally for the potential there. But, big but, my friends. He said big but. It is going to be now the setup. This is what I was saying. Pretty much I was looking for. You had our little 2 days down, holding up on the third day. I think Beyond is going to get ready to continue again, setting us up into tomorrow. So I'm going to grab another one of these tomorrow. I'm either going to grab the next week or 2 weeks out, maybe even in February. We will see. But I'm going to pick up one of these. The key is I don't know which one I'm going to get. It's either going to gap up or it's going to open down. And again, it's going to get very volatile. But I'm going to look to pick up either a naked call or another spread on Beyond Meat. And we still have that other one that goes into next week. But here is the key now with the ghetto spread. Again, explaining how we were up $1,000, how they were worth $5,000, but we only had $1,000 of profits because we sold those contracts. You got to understand with the ghetto spread, because now we even have another play that we made. A lot of people had questions on what you do and how to do it, but the key you have to understand, we do the ghetto spread to allow us to hold the option. So then that way it allows you to book a profit. So in the Beyond case, remember we bought the 130s for this week. It shot up and then we sold the 135. So pretty much it allowed us to hold there. We could have made up to $2,000. We were in the money at one point, but since it dropped down now, we only walked away with that $150. The key with the ghetto spread, it allows you to hold on to the option, but you have to make the decision. If it hits a price you want, like you see $1,000 profit, it may not be the max gain, but you're comfortable with that and you think now that even the stock could come down, you could get out of the ghetto spread at any time. You just have to close both contracts, cover the one that you sold and then sell the one that you own. So there's that. But now coming into this, now why I'm bringing this up, it's going to be important because we had this play that we talked about 2 days ago. I even brought it up again yesterday. It was Microsoft. If you guys remember, we grabbed the January 31st 177.5 call. And again, the best part, this was for earnings, and we got this for about 20 cents or 27 cents. So the key is now it's up at 49. So to understand the ghetto spread, we own this contract. We spent $27 at it. It's now trading at 50. You can now come to this 180 contract and sell it for $30. So if I short this contract, I own this one. You sell the further out the money, you sell it and short it for $30, and you don't need any buying power because if you own the 177.50, it would cover the risk involved at the 180. You collect the $30. We got all of our money back. So now if this contract expires worthless, that means by default this one will expire worthless, but you'll collect all the money, which was more than you spent for this one. That's why the trade is free. But now shorting this contract, you have risk. So if this contract goes deep in the money, this contract protects that one, and you will walk away with the $2.50 difference. So you could ghetto spread it, walk away with $30 here, and get a max gain of $2.50. Now this one covers earnings. This one's doing good, and this is the key of how the ghetto spread. The ghetto spread is very versatile, my friends. It's all up to you, both when you want to do it and when you want to take profit. So in this case, I try to find a balance between getting a lot of money back. So I'd be down to sell this one if it offered 60 instead of 30, or if I could get like $30 for like a 187 and give me a $10 max gain. It's the balance between how much do you collect up front and the max reward you have on the back end. So can you ghetto spread this Microsoft right here, right now? Yes, you can. If you say, is now the best time, or should I ghetto spread it? That is up to you. Which one do you value more? Do you value simply getting your capital back and you're okay with any money you make on this, or at least you can walk away with $3 profit? If your number one priority, without a doubt, is simply to protect your capital and get the money back and at least have an opportunity, you would ghetto spread it right now. If you value more upside gains, you would probably want to wait a little bit, or you could sell another one, maybe get a little bit of the money back, or simply wait. And if you want to have the upside for earnings, you would want to wait. But again, the answer of that is up to you and what you are prioritizing with your investment strategy. I unfortunately cannot tell everybody what to do with that, and hopefully you guys know option trading is extremely risky. You can't lose all the most financial investment. Please consult financial advisor, educational purpose only. Thank you. So keep that in mind. But as far as everything else, we also have that AMD play. I made that one, and that one actually went up today, but then it came down, so we're still in that one. It was about down 7% now, but AMD could be very interesting. Now, being a Friday, I'm gonna keep my eye on it, but again, this whole breakout thing and the fact it's up there again, and we keep hitting all-time highs, that is going to be something to watch. So I like the AMD. As far as everything else, I am going to watch Apple. They did good again, just relative to Microsoft. Microsoft held up, but this could be another good play on Friday. I want to see how they are, because if you see that kind of imbalance between them and Microsoft tomorrow, they're kind of doing this lagging and leading. And again, those are both the highest market cap companies, so keep that in mind. And then lastly, Facebook, they had a piece of news today that they're going to change their proposed plans to put ads on WhatsApp. The news seemed kind of dramatic at first, but I think it was just kind of future plans they wanted to do with WhatsApp and change. They've dropped, and then it kind of came back up. We will see tomorrow, but I don't think it's going to be big. But, I also forgot the last play we made. We did a Home Depot credit spread. So this one is a high risk, high reward. I sold the in the money one. Why I liked it, because at the time, we pretty much needed Home Depot to drop a lot. And what I did here, and why I liked it, because Home Depot definitely outpaced the market very, very heavily. So I was going along the notion that if the market did continue to go up or even stay the same, Home Depot might kind of have a reversal. But I've been trying to make sure I'm getting my hand in the cookie jar on these Thursday, Friday credit spreads, where you could pretty much sell a credit spread. It expires tomorrow. You get instant cash. It's a higher probability than just buying. That's something we discussed, because you could have bought a put on HD, but you would have needed the put to go in the money and drop. Like if you bought like the 225 put or even the 227, it would have cost you a similar amount, but you would have needed the stock to go lower. The thing I liked about this play, when we did it around here at like 228, 227, our break even is 226.80. So pretty much how this play is going to function, it is a $65 risk or something along those lines. If HD drops below 266.80 or 266.86, we make $183. If not, we lose that $60, or you could end up losing less if it still comes down, but not quite there to that break-even price. So this was the play. What we did, you could still probably do this tomorrow. If you're on Robinhood, you can. This is why you could see the chart. When we sold it, I got like 180.83 for it. What we did was we sold the 225 call and then purchased the 227 call. We kept the difference, the max risk, $250, but then you got $183 in credit. So it's like a $67 max risk. That's the difference between there and $250. And it looks just like Home Depot was up, and then it started losing in value. You want the credit spread to lose value, but then Home Depot started to pop back up. But really, this is just a play on tomorrow. It's pretty much saying by the end of the day, where is HD going to end up? That is a pretty binary event that we're betting on here. It's a good risk reward, but it's a lower probability. It's about 15 to 20%, I believe. It was 30 at one point, but then again, you see how that shifts as the stock changes. But watch HD. I like that one. And again, even then, I'm going to be watching McDonald's, because both of them have been doing this dance a little bit. McDonald's did not go up as much, but they've had some pretty big moves even on the daily chart. So keep this in mind. And that even reminds me, I'm keeping my eyes on it. Walmart, you can see it kind of bounce here. We need to see if it starts doing that shift and bounce up, it's going to start looking like McDonald's and Walmart. And watch how these companies play in relation to the overall indexes. That's something that's really caught my eye. Besides that, I'm going to watch Starbucks. They've been one of those outpacing. We still have that earnings play for end of January, so I've been holding that. But It's a slow mover, so understand how to play and swing these slow movers. But I'm going to keep my eye on Starbucks, maybe even tomorrow. Again, these are cheaper plays when the stocks aren't expected to move up. That's why I like all of these, Walmart, Starbucks, McDonald's, HD. They could all make big moves, but they're fairly lower volatility stocks, so you could get cheaper plays. So I'm going to be watching all those. Then watch CSX, watch any of the transports. This is going to be an earnings company. Again, UNH was a post-earnings. We got to play JP Morgan post-earnings. We haven't seen too many big run-ups, but it's still early here in the earnings season. But I like CSX if there is a move, but I want to see the implications it has on the travel industry or transports industry. And then lastly, Shopify. It kind of had a pop up there. Our contracts were up yesterday and they're down that debit spread. Pretty much the contracts are still very volatile. And this is what I'm saying, even kind of like Starbucks, it's how do you play these swings, especially with further out the money plays when it keeps going up and up and up and then kind of slows down. But watch out for that. I still like Shopify a lot. And then finally, for the last chart, watch some of these dividend stocks. Snapchat's not dividend stocks, but long term, I'm going to keep my eye out for them. I still like them on Fridays. Now that once it's a cheap stock and then the premium dies down, that's when I'd really want it if I was trying to flip a contract. But otherwise, we're still holding our shares on there. Watch Abivai. They did good again. And if they start breaking out, and this was a very unique situation I talked about, the fact that they hit X dividend and then they went up. This is every dividend investor's dream if you think about it, especially if you bought it right before. So this is offering a unique opportunity. I want to see if the market does start selling it off or if it does start breaking above here, just like UNH. Abivai above this 90 level, it could start to get a little dangerous here. It could really start to break out of that downtrend that it's been in. But then lastly, AT&T. Now this is one that sold off X dividend, and this is a lower volatility stock, kind of like some of those other ones we just talked about. So if they've kind of already sold out of everything and they've got that flushed out of their system, is definitely now lagging and operating different than the market, as you can see comparing the last 14 days. So this could be something to take advantage of, especially now if the market does go down. Keep an eye on to see what AT&T does. But that's pretty much it. That is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we catch you there in the morning, and make sure you get hyped, baby. That was the whole key for that, man. Some of y'all scary, man. You got nothing to lose, but it doesn't mean you be dumb, but still pursue opportunities, baby. You can't quit right now. A lot of you have been saying, oh man, I heard you and now you're saying that not to quit and I was gonna quit. That's good, baby. Let's go. It doesn't matter if you heard anything or anything, just you gotta make a strategy and plan and keep it small, keep it safe, but you're gonna do it anyways. Whether you win, you're still gonna trade anyways. Whether you lose, you're gonna trade anyways. But be smart, and then at the same time, don't forget about those long-term portfolios. Don't forget about your helmet, your shoes, the belt, everything, baby. I love all y'all, man. We're gonna have a nice Froggy Friday, our second one of the year, so let's take full advantage of it and let's go.